Well, let's drill a little deeper. Angelo Zino is Senior Vice President and Technology Equity Analyst at New York-based CFRA. Angelo, good to see you. Well, you know the old saying, don't you? What goes up doesn't necessarily have to keep on going up. Investors don't seem to think Nvidia's growth is sustainable, as John Terrett was saying. Are they right?
They're right. I mean, and I think that's actually properly reflected in the stock here, to be honest with you. I mean, we were seeing a little bit of a pullback here, and that shouldn't be necessarily a surprise to anyone, because when you kind of start looking at the sequential growth rates and even the year-over-year growth rates, they are sharply decelerating. They're expected to continue to decelerate here over the next 4 to 6 quarters. You kind of look at just the gains that we've seen in Nvidia stock here over the last, just year to date, more than doubled since the start of last year. I think we're talking about north of an 8-fold increase. So we're going to see some digestion here, I think, in terms of Nvidia here over the next couple of months or so. I think all eyes are going to be on this Blackwell offering, but that's really not going to ramp to full potential here until 2025. So you got some time really until we start seeing kind of the benefits from that cycle. But our view here is, yeah, I mean, listen, when you look at the multiple of the stock on a calendar 26 basis, around 28 times, we do think that deceleration is actually priced into this stock.
Now, not everyone watching you will know the granular detail of this company, like you do and our correspondent, John Terrett. But just how significant is this delay announced to the new Blackwell chip that you've been talking about and John Terrett was talking about?
Yeah, so as far as kind of this Blackwell offering, what we've told investors out there is you kind of look at their current offerings, their Hopper GPUs, their H100, H200. It's really kind of more of a GPU offering out there, this kind of GPU, this chip. When you look at the Blackwell offering, it's actually more of a platform-based offering. So we expect significantly more revenue, not only from the GPU itself, but more from the CPU, the network itself, because they've also got a new networking offering in terms of Spectrum X that's, where you can get different configurations of this Blackwell offering out there. But the fact that it's going to be more platform-based in nature expands their addressable market expansion and also the revenue opportunity within the data center. So that's what we like as far as why we like the Blackwell offering so much and why we see upside potential.
Angelo, this is really cutting-edge stuff. We'll be leaving some people behind, so let's turn to a really old question, as old as the hills. How important is Nvidia to the wider tech market, and is it simply too big? Has it grown too quickly?
So we don't think it's grown quickly, but we think there's actually permanent changes that have actually taken place to essentially cause Nvidia to be the size that it's at. And we actually think that the actual size of Nvidia is actually fairly sustainable in nature. There are also always going to be gyrations and potential kind of hiccups in terms of the cycle. But in our view, the shift from kind of an unaccelerated environment to more accelerated AI workloads, that's permanent, and that's always going to require, always going to be driven by these Nvidia GPUs. Nvidia is absolutely essential to the entire technology ecosystem, one, because it gives us a good indicator on the cloud providers and whether or not they're confident in terms of their end demand trajectory, and it's also important towards the other suppliers across the ecosystem as well. So Nvidia absolutely critical to the tech trade.
Angelo, good to see you. Thanks for that. Angelo Zino, Senior Vice President and Technology Equity Analyst at New York-based CFRA.